So we have switched the numbers of panels, and we have decided to go now with responsible finance and impact investment, the future of smart finance for social entrepreneurs. This would be our working title. And we have a great moderator here today from Croatia. This is Mr. Pierre Matek. He is the member of the board of directors of the newly established WBNF office in Croatia. And he is an expert in finance and regulation and investments. So Pierre, I would like you to take your seat. He will moderate the panel, and we have three ladies, three panelists. There is Deniz Misir. She's a family officer from the V22 company from Turkey. Deniz, welcome. Then we have another investor lady, social impact investor from Zambia. This is Ms. Mulemwa Mungwa. Please, Mulewa, we are happy to have you here. And Ms. Özlem Denizmen, founding president of Fodder Financial Literacy and Inclusion Association of Turkey. So I wish you good work, and we hope we will enjoy the panel as we did until now. Your turn.
Thank you, Renata. So it's really a pleasure to have three ladies today continuing the empowerment of women topic even in this financial panel. So with me is Ms. Özlem Denizmen. She is founding president of Fodder, the Financial Literacy and Inclusion Association of Turkey, but she is also a financial literacy pioneer in Turkey and focusing particularly on women. And interestingly, she also has her own fintech startup. So she is working in large corporation and also has part of her career being spent in investment banking. Then Ms. Deniz Misir is a family officer at V22. V22 is an independent advisory firm providing financial well-being and multifamily office services in Turkey. It's a rapidly developing company, globalizing. And finally, Ms. Mulemwa Mungwa, a social impact investor in Zambia, dedicated to financial literacy. Mulemwa is also working with a central bank. She introduced in Zambia a financial literacy campaign 5 years ago. This campaign is now the largest campaign in Africa, and she has reached millions of citizens in her country. So I will give a short introduction to the panel. There is an increasing trend today in capital markets and corporations to use responsible finance to search for and fund solutions to many of the pressing social or environmental issues of our time. So as a result, social impact is growing. It's growing very fast, but it is also changing. So we will bring together the vast experience our panelists have across the social impact arena to identify the main trends and challenges to the future impact investment. Some of the main trends is that the big names from financial industry are stepping into social impact, ESG, and so on. Another trend is cultural and also generational trend. More and more women around the world are having access to finance, and also millennials, the new younger generation, is also growing up and having access to finance. Both these groups have pronounced interest in social results. So when they invest their money, they are not only interested in getting a financial return, but also they want to do something good with their money. And finally, a third trend to be discussed is the technology. As we all know, technology is impacting all of our lives, also finance, and of course, the social impact investment cannot be an exception to that rule. So, Özlem, so what main changes do you see with the entrance of large financial corporations and institutions into the impact investment. So do you think that the impact investment is going to lose maybe its philanthropic heart? Are these new players going to distort or misuse the term social impact? How do you see the role in the social impact?
Corporate ventures coming in, I think that's a great opportunity. The more players are in, the better. And a couple of issues with the corporate investors. Some of them are quite sophisticated, like Intel, Capital, Microsoft, and some of the firms are very well adjusted and operating quite well. Some are, newer and not well established. Obviously, there is a couple of issues. One of them is alignment. Sometimes when the corporate venture is investing in an impact area, sometimes they find it not very much aligned with what they're trying to do. For example, like I can give in the financial literacy space. For example, the bank is trying to, actually have the credit cards charge up and pile up interest so they make money. But then if they teach financial literacy to people and, teaching them not to pay that interest, that is going a little bit against, it's a bit carbon cleaning as I see it. So there can be some alignment issues. I think that's one issue. Another issue is speed issue. Sometimes the processes are so long that it has to go all the way through all the channels. It's better if it's just directly reporting to the CEO from the examples that I've seen. And also there's the empathy issue. Sometimes in very, very largeness of things, the startup culture is extremely different. There should be, high empathy cultural changes. So that's what I'd like to say about that.
So do you think that they are bringing something new to the table, but they also need to learn about this new view of the world and to have more empathy?
Well, we all have to learn, right? Like every day we wake up to a different world. So it's a matter of, are you in the game or not? I think people divide into two. People are in the game, who choose to be in the game, who have a chance to be a part of managing what's going on in the world, and the rest, zombies just following. So we all have to learn, I feel.
So Dennis, you wanted to add something?
Maybe I reflect on the empathy component that you just shared. I think you just mentioned also there's more and more emphasis on the women and the millennials looking into impact investment. And why is that? I think it's because the female quotient, which includes the empathy, strategic thinking, and perseverance in my eyes, in addition to the male quotient, which includes being quick, results oriented, and little bit more practical and pragmatic. When these two components are combined in a company, it is observed that the success rate of that company is 63% much better. That's one reason I've seen in our space initiatives like Astia, like from Turkey, Arya, and some venture capital like Mindshift Capital from Dubai, all investing in the female quotient-driven disciplines right now, which links up to impact investment, which I can reflect later on.
Okay, so Mulenwa, do you think that, are the social entrepreneurs, you are working on the field, you are working in financial literacy, are they ready to face these new types of investors, which are more financial, professional investors, rather than philanthropic investors? What do you think that should be changed maybe in financial literacy campaigns? How to support these small entrepreneurs to face such investors?
So I will start my response by picking from your first question. So when you look at the world beyond the Y2K, it came with different challenges. So you have the unemployment scourge that is at the highest even in the most industrialized and developed areas. And then you have the economic crunch of 2008, where the vulnerability of children and young people was exposed. So we're kind of, and we need to move from a situation where corporates are moving from just throwing money at projects to ease their cautious as a CSR project to them actually having actual impact. So it's now having this money that is sitting there, these resources that corporates are able to disperse for certain social interests, but now we've identified it as a possible pool to get in money to invest in say, startups. Now, in this case, the biggest element is the unemployment. This is where you have the millennials, the young people, the new generation who are trying to come up with this business idea, these business concepts. These are new ideas that are chasing old money. So it's a very difficult conversation to have when you're a young person with this, you know, you're working in an Xbox world, and then you have to go into a boardroom and sell your idea. So it's that providing that bridge where at the end of the day, you look at a corporate putting out money that they may or may not get back, which they could have done. They could have, you know, cleaned out the streets or done something different. But in this case, they're putting the same money to invest in an idea that could possibly be the big next thing on in development.
Okay, so you have mentioned, do you want to add maybe something on the topic?
No, you can.
So you have mentioned, all three of you, in your answer that women have more empathy. So it is a trend.
Do you not think so?
Well, depending on the women. It is definitely a trend that social impact, I think, Mulenva, you mentioned conscience. So social impact is not only a reaction to bad conscience, it's also a cultural and a generational phenomenon, with the millennials coming to power and women all around the world having more access to finance. So then as you work as a family office, it would be really interesting to hear whether you are also receiving such signals from your clients, that they have more interest in not only getting a financial return, but also doing some good with their money and wanting some proof and metrics behind that.
I've been involved in the impact, sustainable, values-driven investments even before I had established V22 when I was working as the area director to Turkey of the Netherlands Foreign Investment Agency. I've seen how the space has changed. There are some good and bad developments both, depending on where we are standing right now. In general, yes, it is indeed a fact that the family offices and the families and lots of institutional institutional investors, allow me to say, are looking into how to create a better world. So that is the philosophy behind whatever you call it. The philosophy behind is bringing well-being. So in that respect, like in my eyes, although it was initially like a buzzword being implemented by many different groups of investors, being kind of, while at the same time it was becoming a little too sophisticated and too complicated for many of the investors, part of the development was making it more simplified, and now it is becoming more mainstream. That being said, because of the financial distress in many parts of the world, it is again a little bit under stress. That is what I am observing. So in my eyes, for families and family offices and for any of us, if we really hack the philosophy behind, which is well-being, and if we replace impact investing with well-being investing, we will be able to create a more harmonious world, which will help us to address the social development goals more in an accelerated fashion.
So are these clients giving up return when they are acting as social investors, or not? This is one of the main controversies in social impact investing. The Gene survey shows that 64% of social impact investors target market returns, which means that it shows that at least before the investing, they are not giving up on the return. So can this coexist in the portfolios.
Yes, if, for instance, if you talk to the impact, which is being funded, for instance, by Rockefeller family and some other families, their next chance have made an impact, a pact, and they have undersigned that they are doing this because they want to create not only financial returns, the other returns as well. So they are really like standing examples that this is doable. And if you look at, I have to say this is in a number of different parallels, if I may tell you that, the return question that you're asking. For example, KL Felicitas Foundation has actually proven that you can get financial returns with the impact returns. So they said we'll do all the portfolio, including the liquids and the illiquids, based on impact criteria. The discussion in question is what that criteria set is in the space, but the question is not whether it is more financially returnable or not. That being said, this is, for instance, especially for the liquid part, because if you're investing in companies on a stock exchange which are already doing the ESG criteria, you're already supporting the better companies in a way. And according to some of the other researchers, like I know multi-stone hedge Fleming guys back in, they have certain criteria according to the appetite from the families behind them, and that criteria is do no harm, seek out good, and prevent the bad guys. And there the risk-return grid is a little different. So remember, there is always a financial return component inside it, but what is the exact risk-return grid that you will be involved depends on your investment appetite as an investor.
Yes, go ahead.
If I may add something, I mean, I think one of the things that's different is the measurement, you know, and also talking with specific, say, SDGs. I mean, this is when the sustainable development goals come into place. Okay, you know, it's very easy. In my case, what I try to do for women in financial literacy, you know, okay, so it's gender equality, SDG 5, and economic growth, SDG 8. So I try to tackle, you know, these two SDGs, let's say, yes, and then trying to come up with the KPIs and processes a bit based on that. And I'd like to say second is that the perception-wise, I mean, just, you know, when you actually fit it into the SDGs as well as the, you know, the churn rate, the whole ROI and everything, all the financial side, when you do both of these and show it, I think that works fine. And so like that, you don't, you know, just because it's social good, you're beyond that, you know, tree hugging and we love each other only sort of thing. So you have some measures and yes, this happens. I mean, you know, you already are like you know, I was in Palo Alto in the summer talking with investors and just testing, you know, because I got my seed round last year and I will go for Series A. So, you know, being a woman has its own thing. They told me, take your CTO with you. He's a man. Okay, that's one. And second is that, you know, you'll talk about your social thing. Don't say the social part so much. So I was trained in Palo Alto talking to investors as to what to say, what not to say. What I'm trying to say is there's also a language you have to speak, obviously. Mm-hmm. So taking it all the measurements and you know, and the language and the, you know, game rules is a whole part of the empathy with them. How we make empathy when we talk with the investors, if you will.
So coming back shortly to the first question, it seems that there is a lot of learning also for the social entrepreneurs to be able to approach
that's what I'm saying.
The investors.
Yeah.
Yes, absolutely.
It's a you have to study the rules.
Yes.
So Molemba, while preparing for the panel, you also mentioned that you can present the social impact as a return, which is very similar to what Özlem says. So you also experience that investors are being more comfortable with some metrics being shown, and if they have some impact return, it makes them happy, and it fulfills also, let's say it coexists with the financial returns to create them more happiness with the investors. So you can present it this way.
Okay, so this is a Very interesting conversation to have at a forum like this, because we're talking to people that are, their main interest is really the bottom line. Am I making money? Am I not going to make money? That's the conversation that we're selling. But on the other hand, we are, social entrepreneurship is, it's not a very new arena, but it's an arena where people like myself invest their time, their resources, and carry a risk for a greater good. So there is a financial element that we put into this work that we do. Now, on the bigger picture, why do we do this? It's because if we don't, certain things happen. So if we don't take responsibility now for the future, there's not going to be enough money to save certain situations. So we are coming to people like this and saying, you need to put in money in this space. So for instance, the corporates, the banking. So like she said, when you go to the banks, they want to sell credit cards. They don't want to tell people don't borrow. But that's exactly, because if you look at 2008, the economies, thank God I come from an emerging market that didn't feel the impact that much. But the countries that felt the impact, if you look back, it was really people making bad financial decisions. Individuals like me, like you. And the ones that ended up suffering were the kids, because they were losing accommodation, they were losing parents. And what that does in the long term is, what that shows you is that these people did not understand how to manage their personal finances. Now, bringing it to a close is saying, if the banks now put aside money to educate, the financial institutions put aside money to educate a 10-year-old, they will not recover in the next 5 years. This kid will still be in school. But you're looking at a long term. First, you have parents that are going to put money aside for this kid. That is a plus for the bank. You're looking at this child potentially becoming a client in 20 years who is a financially sound client, because they went through, they've lived their life with this, with their financial habits, and then they could potentially be an employee of the bank. So you're actually investing for the future. So you are looking at a 10-year-old today. I'm seeing a potential 25, 30-year-old that is, going to be as a result of the money that was put aside by a financial institution. And this is what we do. You look at young people that have ideas. So when these young people come up with, I think in this environment that we work with, maybe 5-10 years ago, it was required, you had to come up with a business proposal, a 5-year plan, projections and all that. Millennials do not operate like that. Millennials want it to happen today and fast. And this is where the incubation and money like this comes in. So you need a bridge that is going to provide opportunities, people that are going to speak on behalf of these young people. The overall picture is economic development, and that is SDG 8, where we are saying we are doing and working towards developing our economies. We live in a global village. So investors here, I'm coming from an emerging market. I'm not going to come and sell a pro-poor type of a message to say, no, this is what we need. No, we don't. What we need is people that are going to be able to commercialize ideas. So if I'm here, I'm coming and saying, these are the ideas that my country and people in my region have. This is the talent that is available. Because if you look at the demographics between Europe and Africa, Africa is actually a younger continent. So we have the people that can actually work with these ideas. You can come and develop the ideas there, and that is what I will be selling in this context. So it's twofold. So we want the corporates, the VCs that are putting aside social money to actually look beyond the initial conversations of what investing was like.
So you made an excellent point at the beginning, mentioning the long term. So it even fits into economic theory, saying that in the long term, we are all much better off taking care of all the stakeholders rather than only ourselves. So because it was not only bad financial decisions by the people hit by the crisis, but also bad financial decisions by professionals within the financial institutions, and also poor risk management within the financial institutions. So now, is it this change in mind and trend? Is it only short-lived? So Özlem, you're also a media person. You maybe have a good feeling of the longer-term trends. Do you think it's just a short-lived kind of fashion, or is it a secular long-term trend and change in the minds of the entire world?
I think it's a very much long-term trend because, I mean, my sons, they are very, keen on doing things that with empathy. With, I think newer and newer generations, they have highest empathy. They are the users, they are the investors, and as she said, the world. And so, and they are actually, and one of the ways we teach financial literacy is actually making an analogy is with the children. And the children, is it a need or is it a want? So they ask their mother, mother, you're buying the red shoe. Is it a need or a want? So then all of a sudden, it's not, like you're just poked and questioned.
So
all
don't
the
go
time.
shopping with your children.
No, go shopping with your children. So it is very much effective. The children, and the youth, and etc. So it will be long term. But also, I mean, it's a matter of seeing this as an opportunity. Okay, so there's 1 billion women who are not in the financial system. You can say, oh, 1 million women, oh, like, let's pity them, whatever. Oh, you say, oh, wow, like, what an economic opportunity. Let's tap them, just, it's a bit of how you look at it. I mean, okay, 80% of the economic decisions, I mean, spending decisions are made by women. Okay, so when you look at it, you see, it's a BCG report, Boston Consulting Group report, so you see all of a sudden this opportunity. So the perception, and I mean, you can do good and turn it into money. It's not anymore these, go hug a tree or make money. You can do, it's integrated.
Dennis, you wanted to add something?
Yes, actually I do. For instance, Mulava mentioned the old money. You mentioned if you look at the wealth world, how it has changed, how it has adapted itself with the systemic upgrades, I would say the wealth zero was about accumulating capital, doing the risk management, and doing your play right with respect to being a good financial manager or an investor in that kind of way. But it has changed because the world system is not going to. For instance, if you look at the social development goals and if sustainable development goals, the climate change is a real problem and no one has really solved that problem. And that includes, for instance, the poverty. The poverty is not addressed at a global level, and there are traps within those sustainable development goals as well. So we need to find a solution. Seeing that from the perspective of millennials, they realize that the old system is not going to work if they want to create a sustainable generational wealth transfer. So they come up with wealth, what I call 2.0, which includes actually the accumulation and sustainability of that wealth. How that happens, for instance, when I'm working with a family, where do we look? We look at their definition of their capital with respect to identifying their intellectual capital, social capital, financial capital, and other parameters. And I think it's the same discussion for the social impact investments. It's not going to be, how you call it, if it's impact or sustainable or whatever. It's not going to be about the labeling, but it's going to be about defining and integrally from an internally owning its point of view. And I see millennials being really very good on this. So I much agree with Özlem that this is going to be, especially with them coming more and more on board, going to be a fundamental thing going forward. And I know it's under stress because of the financial distress all around the world, but I also see, like you said, it's going to be an opportunity.
Very much.
For them and for the conscious investors, which is coming more and more on board. And I am very privileged to know a lot of them in the world. This is just going to come more strong as a fundamental change.
Just one sentence here. Like my son says, Mother, I want to talk to Elon Musk. I said, why? She says, he's trying to go to Mars, but I think we can live in world and then make this place a better place. It's just going to be much less costly. So this is how kind of the new generation thinks.
It's interesting. So we have touched a new generation. One of the things that is inextricably linked to the new generation is also technology. So Mulenwa, you are working a lot with financial literacy. So how do you incorporate technology within financial literacy, because in today's world, you cannot be financially active without being involved in technology, from the mobile phone apps to ATM machines, crowdfunding platforms, social forums, whatever. So how do you see incorporating, is it important to incorporate the technology into the financial literacy?
It has been said that the greatest equalizers of our time are education and technology. So teaching people, giving people the right life skills, and also integrating technology along the way eliminates a lot of advancement barriers. There are a number of apps that were developed in response. So a lot of entrepreneurship is born from what problems am I a solution to? And that you can see a lot, especially in fintech, the solutions that have come up. So in today's world, even people in the most remote of places will have some form of mobile phone. And that mobile phone on its own has now become a savings device. So it doesn't matter your socioeconomic status, the iPhone X and one that is, an analog basic phone will provide pretty much the same service because they both can keep your money. So it is just now equipping the skills at the different levels. How do you then optimize the platforms that are available? Apps like M-Pesa, which is strong in East Africa, is one of those startups that went and boomed because it responded to a need. In most of our markets, they have tried to replicate, but it is very difficult to actually beat what they started because it's not the same. So the new entrants have tried, but it's not the same with what they did because they came into the market when they did. So in looking at investment opportunities, it's also an opportunity for investors to look at how can we find solutions to these problems. So what products or what is it that is out there in terms of being developed, and to what problems does it respond to? Because then you end up with your own M-Pesa at the end of the day as an investor. So it's even looking in that arena that would go a long way for investors.
So Islam, you have your own fintech, which is also a social impact fintech. So what is the problem you are trying to solve?
Well, financial literacy means to have the right skills and knowledge to be more, to be making more effective and good decisions for the financial resources that you have. So I'm attacking especially women for them to make, it's a personal finance bot. We've developed a bot, a chat bot that is becoming your friend. It's sort of like taking me, what I do with women for the last 10 years, taking me, making mini-me in a scalable way, like a robot. It's becoming your friend and talking, and it's going inside your daily life. So we've concept tested, and they like it. I mean, we have even we developed this kind of emotional bond, and Nobel Prize was won by Richard Taylor on behavioral finance. So it's very much it's a nudge itself. It's trying to change your behavior. So it's taking time. We have AI we use in the background with NLP and etc. So we're trying to use the latest potential available scalable technology to reach especially women in a most human-like way. It's a challenge. An innovation, but hey, life is about that.
Yes, and Dennis, you want to add something on this?
I do. We have been involved a lot on tech things because new generation also likes tech investments a lot. What I observed in the space, especially linking that to the impact investment discussion, is like at the moment a tech venture is supported by positive intentionality. it is really helping well-being for its investor, entrepreneur, and the society. That being said, right now in the market, one of the main problems for the social entrepreneurs not to be successful is that the market is based on more consumer-driven pitching policies. And if you know what I'm trying to say, compared to, for instance, competing with a non-well-being initiative compared to a well-being creating initiative, the market is less costly and less easy. So there has to be a change at the consumer side as well to help the social entrepreneurs, to help social investors make money from the social entrepreneurs, and to social entrepreneurs accelerate their success rate. So in that respect, for instance, when an initiative like Özlem...
So can you help me?
Of course, with pleasure. But what I was trying to say, we need to be more aware and conscious as investors, as companies, as others, that there is a well-being impact created. Like in example of Özlem's venture, the well-being impact that she brings to the table is help women to be more conscious with using their money and to be able to have a self-autonomy, right? As compare that to another initiative, just makes money from a lot of marketing all around and doesn't create any meaning for our children and just uses their attention to make money for itself. We shouldn't support that kind of initiative. So this is not only from an investor's or entrepreneur's point of view, but I think on a more mass level, making all of us more conscious about what values-driven investments and values-driven operation indeed is.
But technology can also help bring the... Yeah. Yes, thank you. Yes, so technology can also help to bring the... to join the social investors and social entrepreneurs with the funding. So we have mentioned at the beginning that the big financial names are entering. Of course, business angels, venture capital funds are also around. But technology is also allowing some, let's say, retail people with whatever background to enter social entrepreneurship. For instance, we also have seen crowdfunding platforms developing. So do you think this is also a way to go forward, or is it too risky for the investors? I mean, the retail investors, without really doing a due diligence of the project, without having a hands-on approach like the business angel, without the mentoring of the social entrepreneurs, is it a way to invest, or is it just charity?
They can try.
Who would like to?
They can just try. I mean, everything is up for trial. So in terms of, for example, in Turkey, it's just getting there with the regulation for it to open up to everybody. These are new things. I mean, one of the challenges, just like Bitcoin and the whole blockchain world. I mean, consumer, because we train the consumer and what to do on financial literacy, they really have to try an error thing, and then there's a new product every day. So as I said, people divide to two: those who are in the game, who are trying to make an effort to be in the game, and that doesn't happen by just sitting and watching Netflix. So you just have to put a lot of effort to live in the world as a financial consumer, as a human. So it is really, I see it very very simple as that in every essence. In finance, in this and that. I mean, you're just behind the game. That's why there's high levels of depression in the world nowadays. You don't know how to cope, right? That's why there's all these apps that help us automate, that make our lives a bit more automatic. Because if I try to do everything, it's not healthy for me.
It's complicated. Well, thank you. It's now time to close our session slowly. So before giving my final remark, I would like each one of you to share with our audience some message to take home. So maybe starting with Mulemwa and towards Özlem. So please go ahead.
Okay, so I think moving on from this this forum, first I would personally like to thank Bebas for giving the space to the social impact conversation. I think this is a space that is very underplayed in forums such as this, because it is very difficult to quantify in terms of what it is that you're doing and what it is that you're getting out. But there is a huge opportunity for people to invest in it, and the space can only grow because we are aligning what we are doing to the social good, really, to the bigger picture. So if we cautiously, as investors, as angel investors, look for opportunities that have a larger social impact, then we will have done our work. My efforts will not be in vain.
Thank you. Dennis?
I have two key messages. The first one is it's really a matter of seeking well-being. It is so I would say do not label it impact or some other thing, but seek for well-being. Once you are seeking for well-being at all levels, you will come there anyhow. And when you are seeking well-being, it requires a little bit more of a conscious effort every day, if I may say that, because I see companies and corporates and others making it a statement just to use it as a tool to get more funds or to get the day. That doesn't work. It has been proven. It doesn't work like that. So it's a conscious effort every day to make it more in line with a well-being approach, I would say. And that includes, in my eyes, one of the main bottlenecks. That would be my message to those institutional investors and others who might be watching us. There's an incredible unconscious, I would say, country or local bias and country bias, if I may say. I've been in the space. If you ask how many impact investors we have onboarded so far to really invest in Turkey, we haven't done so many, which I find is a big disappointment at my end. I think that kind of get level playing field we should end, because these are the collective problems, and we have the best people everywhere in the world, and that includes the Turkish investors investing elsewhere and the other investors investing here. So I really believe that we need to stop, the GDP discussion or all the other discussions, and we should make it a well-being for the earth, for the people, and we need to be going more at ease and more intentionally, purposefully driven to do that.
Thank you, Dennis.
And for everywhere.
Özlem,
Yes.
your final words?
I think trust would be my final word. I mean, we base, for example, our application on trust and on brutal honesty, 100% transparency. And this I think has to happen. This is already there anyhow. Everybody knows. I mean, Google knows what I'm doing. Alibaba knows what I'm eating. So in other words, we're all hacked, right? So instead of hiding anything, I think that both between the investors and the entrepreneur and as to how you make money to the users, I think we need to be like brutal, take the path of trust, because trust. I'm a young global leader by the World Economic Forum. 2 years ago, the whole topic was trust. I mean, people lost trust in politicians in the world. People lost trust in a lot of things. They don't find things authentic. And so I believe we have to have ways to increase trust by, more transparency and more brutal honesty. And that's what I'd like to leave it with.
Thank you to all three
Thank
of you.
you.
I think we have heard really important messages today, and it leaves us in an optimistic tone, which is very good. So you all believe that the social impact is here to stay and to develop for the long term, because we are witnessing really a secular trend and generational change, which is very important. We need to adapt to the changes of the world. Social impact is not immune to technology, it's not immune to different business models, and as you said, you just should keep on trying and change your behavior as the world is changing. Thank you, and thank you also to our audience.
Thank you very much.
Thank you.